Joining us on the Newsline today, Wharton School Professor of Finance Jeremy Siegel's with us. Professor, it's great to talk to you. I was struck by the nope, that's not the professor, but we'll get to that in a second. This journal piece over the weekend saying the Fed can't put off prepping for rate cuts because if you got productivity at 4 and productivity at 2, wages at 4, that kind of puts you near target.
Yeah. Absolutely. And, I heard Roger Ferguson, who I respect a lot, on the 6 o'clock hour, and he said, that could be a problem, 4% wages. But 4% wages is absolutely not a problem when you have 2-3%. And actually, you had over 5% productivity growth there in the third quarter. So, yeah, the unit labor costs have been going down. So that should not be a problem for the Fed, and I absolutely do advocate that they start thinking about lowering it. I don't think they're going to do it on January 31st, certainly, but they should think about uninverting the yield curve in their March meeting.
Why do you think? To what degree are the market's jitters about either a warm CPI or pushback from Powell? Are they justified to any degree this week?
Yeah, honestly, I think the dot plots are going to be hawkish. And I don't think they're going to be right. I think they're going to be too hawkish as developments do, but that could unsettle the market. Yeah, we will have to see CPI and PPI. Now, by the way, they've already submitted their dot plot, so nothing that happens tomorrow, Wednesday, going to change the dot plot. They are not going to move. That's not going to change either. But you were right in talking, a while back. It definitely would change the tone of the news conference on Wednesday that Powell does, depending on what those two factors are. And by the way, he has cover. The fact that the unemployment rate moved away from that 4%, which I think would have been politically not a good thing, down to 3.7, gives him more political cover in a way to be hawkish because unemployment is still under that 4% level, which is, quote, politically acceptable.
Speaking of politics, I've heard in a lot of, cocktail conversations, Powell's going to cut rates more and he's going to do it faster next year because he doesn't want Trump to get elected again. I know that the Fed is very apolitical. They would never do anything like that. But there is an election and an election economy to be considerate of, whether you're going to tie it to Fed policy or not. And I do wonder how that's going to impact the markets next year.
Sarah, you're absolutely. The Fed is a creature of Congress. It was created by the Federal Reserve Act. Congress can take away any of the powers of the Fed it wants to. And they got to be conscious. And truth be known, don't forget they still have a dual mandate. It's not just inflation. It is inflation and employment. So it isn't like he's abdicating all his responsibilities. And when we take a look at commodity prices, as you mentioned earlier, going down, yes, there's going to be some stubborn parts of inflation and core inflation that are going to continue. But, if you'd ask the American public, what would you rather have, 1% less on the core over the next year or another 500,000 people unemployed, I think the choice is clear, and I think he has to recognize what that choice is.